What's up everyone, it's Scotty with MoneyVest. So this is going to be a complete technical update on the Magnificent 7 stocks here for all of you. And this is going to be a weekly update that's going to help you plan out your trades for the upcoming week, because next week we've got inflation numbers. And I'm going to break down all the Magnificent 7 companies, including the S&P and the NASDAQ, and talk a little bit about volatility as well. As always, if you enjoyed this video and find it helpful, make sure that you drop a like and don't forget to subscribe to the channel. Again, links to our Discord and Patreon is going to be down below if you're interested in joining, and of course getting access to over 45 plus members only videos. You can unlock all the content, including all the spreadsheets, the watch list, the fair values, the Discord channels, trade alerts, binds alerts, options alerts. Everything's going to be included. This is the most recent video I posted for all the members, 12 stocks that I'm buying, including my buy targets specifically for each company, along with ETFs that I'm planning to buy. And of course, do connect with me on Instagram as well. My handle is going to be CASWRP. And you can basically view all the stories and updates and portfolio updates, and of course interesting polls and strategies and stuff as well. So first things first, let's talk a little bit about volatility. And VIX continues to be incredibly muted and low. So we are looking at the VIX at under 13 right now, so 12.92, and it's just been consolidating sideways here in that range for the VIX as well. So this right here is just a lot of consolidation here for the VIX. Resistance is going to stay put at 1495.15, and the support is going to stay put at 1292, closer to 13. So lots of consolidation, and as we've already discussed, the next time the VIX spikes, it is going to be a time dollar cost average into the market, be a little bit more heavy in that cash deployment. And that's exactly one of the things that I discussed in my previous video as well. And also in the members only private video, I highlighted 2 to 3 trade setups for when the VIX is higher once again. So the moment the VIX spikes up to, let's say, 18 to 20 or as much as 36 to 40, that's going to be a good opportunity for us to once again start looking into the market, start looking at certain ETFs from a tactical swing trade standpoint. But right now, the VIX can continue to stay low as the markets continue to drift higher and higher. Speaking of higher and higher, S&P 500 with its 4th consecutive green week, and the RSI MACD, of course, very overbought on the weekly time frame, hitting a new all-time high. So if you really take a look at this uptrending channel, which is the higher highs and higher lows, you'll notice that we are coming up to that higher high at the moment. So this is where the market's basically bottomed here back in October of 22. Since then, we have just been pushing higher inside this uptrending channel. We did see a little bit of a pullback, and since we have seen consistent weeks, week after week, of markets just ripping higher, drifting to new all-time highs. And of course, on the back of that momentum coming from Magnificent 7 and technology stocks, and that's exactly what we're here to discuss. So of course, there's no resistance right now because we're still in price discovery, because this stock S&P 500 is actually trading at an all-time high. But when it comes to a support, we're going to obviously be watching this right here. That's going to be that 4,800 level. That 4,800 is going to be aligned with that previous resistance, and also a little bit of that hiccup that we had. So you'll notice that we actually got up to that level, sold off a little bit, and then broke out even further for S&P to get back up to 5,000. So that right there is going to be that support level to watch here for the S&P in case we see a bit of a breakdown. That's going to be at 4,800. Reasonable pullback expectations considering how overbought we really are on the RSI and the MACD. Now, talking about the NASDAQ, same thing on the weekly time frame. You can see how overextended it's now starting to get. Overbought RSI at over 73. MACD is also pushing higher, and the resistance is going to be at an all-time high at 16,200. So that is going to be that level to keep in mind for NASDAQ here moving forward. This right here is going to be Apple. So again, Apple, you'll notice a very nice consistent uptrend over here. It was in that higher high and higher low pattern over here, and then started to break down, lower highs and lower lows, then recover back up a little bit, and it's now starting to make that lower high and lower low pattern once again. So Apple, Tesla, and Google are the 3 companies that I was able to identify that are still quite reasonable on the technical basis, considering that they're not overextended, they're not overbought, they're not like stretched to the upside. Everything else, Nvidia, Amazon, Microsoft, AMD, I mean, you name it, they're all very, very stretched to the upside. So if there's any sort of momentum that can drive the markets even higher, if there's anything that can keep the market somewhat reasonably afloat, it's going to be those 3 companies, as I mentioned. Tesla, Google, and Apple can keep the markets somewhat reasonably priced and positioned because they're not that overextended. You can take a look. The RSI is quite neutral at 49. MACD is quite neutral, and the price itself, of course, inside this downtrending channel of lower highs and lower lows, is also not that bad. It's quite reasonable at the moment. as it has been trading. Now, much stronger support in the 180s. That's exactly where we picked up some shares of Apple, and I will be looking at dollar cost averaging a lot more in the 160s for Apple as well. That's going to be a much stronger support, in my opinion, for the company. Now, Amazon, on the other hand, is one of my growth stocks. As I mentioned before, that Amazon has a ton of potential when it comes to profitability. It's only getting started, in my opinion. This right here is going to be those next two targets to watch for Amazon, 176 up to as much as 190. So those right there are going to be a couple levels to watch. And of course, this previous resistance that we are also looking at, from highs of around 175 to 190. So this right here was the overall downtrend. So lower highs and lower lows. And right now we are looking at a very nice higher high and higher low for Amazon. The only thing is, of course, once again, very, very overbought, very strong move on Friday, pushing up over 2.7%. Up to 174. So 176 is going to be that resistance, all the way up to as much as $190 per share. Now, Tesla, on the other hand, as I mentioned, along with Apple and Google, is actually quite reasonable from a technical basis, considering that it has been selling off inside this downtrending channel. Still very, very oversold at the moment. You can see the MACD is just crossing over that signal line, and so is the RSI. So there is potential for us to maybe get a move back up to 200s, 210s, 215s, and of course that next resistance is going to be all the way up to as much as 240. So that is going to be a much stronger support at $240. That's kind of in line with this lower high inside this downtrending channel for Tesla. And of course, the potential is there considering how oversold it really is at the moment compared to other stocks in the market, including on the weekly time frame. It has potential. On the week, it was up a little bit over 3%. So there could be some continuation on this week, given how inflation numbers end up being for the markets here and what the reaction is overall from the markets and technology stocks. Nvidia, on the other hand, I mean, I don't have to really say anything other than the fact that this has just been on a ripping rally here. RSI MACD just incredibly overstretched and overbought. And of course, we broke out from that ascending triangle. I mean, just take a look at the last 4 or 5 weeks here for Nvidia. Have been crazy, absolutely crazy. So again, there's not really much to go over on the technical front other than there's just a few facts that are RSI is overbought, MACD is overbought, price actions very, very overextended to the upside. So you just got to be super careful with Nvidia on the long side and even on the short side. I mean, this is one of those places where you got to be careful both ways, right? You just really can't do much other than, unless you are day trading and you have very tight stops, there's not a lot that you can do, because on the long side, this is very unfavorable risk reward. On the short side, you'll be betting against the trend and you could get destroyed if you start shorting the stock and it keeps on ripping higher and higher. So it's like one of those things where you want to just like sit back. If you don't already own the stock, relax. If you already do own the stock, also relax, because it is just ripping higher. It's obviously giving you a significant increase in that percentage gain. There's certain things that you can do to hedge. Obviously, you can sell calls, right? So selling calls would allow you to basically get rid of some of the shares if you want to and de-risk a little bit at a certain price, right? So you can select the strike price and collect that premium along the way. But of course, that the risk is that you could lose your shares considering how strong the rallies have been for Nvidia. Now, AMD also, I would mention, along with Tesla, Google, and Apple, that is actually quite reasonable from a technical standpoint. It hasn't really been ripping higher like Nvidia has. RSI is reasonably neutral. MACD has also been pulling back on the daily, 60 RSI, and it's also looking like a pre-breakout pattern where it's got a little bit of that symmetrical triangle of lower highs and higher lows. So if you do get a bit of a breakout here for AMD, next resistance is going to be at close to $185 per share. And this right here on the weekly time frame, however, it is overbought and it is a little bit overextended. So I'd definitely be very careful considering how overbought AMD is on the weekly time frame, despite the symmetrical triangle formation, which could lead to a bigger breakout for AMD. Resistance is going to stay put at close to $185 per share for the stock. Meta, on the other hand, also is overbought, as we have already discussed. A very, very strong move to the upside to new all-time highs. Take a look at the RSI, take a look at the MACD, the price action itself, kind of just chilling up there in the 460s, 470s. It's got a little bit of a gap here that it needs to fill in the 430s, and support level is going to stay put down to $383 per share. So a little bit of that resistance in the 470s for Meta, and support level is going to stay put down to 384, and it's got a little bit of a gap that it needs to fill here. RSI MACD also very overbought. Google, as I mentioned, along with Tesla and Apple and even AMD to some extent, is still reasonable because the RSI MACD are not like super crazy here, and it's starting to see that recovery back up after the breakdown from earnings for Google. So validating that support in the 140s, so 139, 140s, and resistance is going to be at close to $150 per share for Google moving forward. And next target and resistance is going to be close to 152, 153. Microsoft here pushing higher. So RSI, MACD overbought. There is a little bit of that negative divergence because the price itself continues to make these higher highs while the RSI is making these lower highs. So that right there is going to be that negative divergence for Microsoft, and we continue to trade in this uptrend for Microsoft at the moment. So that's where we are. I mean, among all the stocks here, I would say Microsoft, be careful. Google is quite reasonable. Meta, be careful. We got AMD, I would say weekly, be careful. Daily is quite reasonable. And of course, Nvidia, we've got very overbought. Definitely be careful. Then we've got Tesla here, not that crazy on the overbought overextension here. And then Amazon, definitely be careful. Apple is quite reasonable at the moment. So when it comes to the overall market dynamics here, as I've already mentioned, we are looking at a market which is consistently pushing higher and higher, drifting higher on the back of these technology stocks, and the concentration continues to get narrower and narrower. But moving forward, I think we need that broad participation. That's where the Russell 2000 comes in. That's where the Dow Jones comes in. That's where the consumer staples and defensives and energy and financials, all these sectors need to participate in order for this market to sustain the rally that we're seeing. Because at the end of the day, if Nvidia, AMD, Amazon, Apple, Google, Microsoft, Meta, all these companies start pulling back, if there's any type of profit taking, well, guess what? The market's going to start rolling over as well. It doesn't have that participation, doesn't have that support of other sectors that we do desperately need for these markets to continue to stay where they are and possibly even drift higher to new all-time highs. So that's where we are at the moment. Of course, there's few stocks that are trading at all-time highs, overbought, extendedly, like just pushing higher, stretch to the upside. And there's other stocks that are still quite reasonably priced as in technically reasonably positioned, I should say, from a technical standpoint. So that's where we are. Hope you guys enjoyed this video and a quick technical update on the markets here. Make sure that you drop a like and don't forget to subscribe to the channel. Again, links to our Discord and Patreon is going to be down below if you're interested in joining. And of course, getting access to all the members-only private videos. You can access over 45 plus members-only private videos, including this one more recently, 12 stocks that I'm buying, including my buy targets, and do connect me on Instagram as well. My handle is going to be CASWRP. And as always, happy investing. I'll see you all in the next video.